Okay, I think we are going to go ahead and call the work session to order tonight. And we have two things on the agenda, and the first one is just a budget update. So I have Joel Parks here, who is our CMFO, who's going to give us an update to the budget.
I have looked over the budget. I was using the numbers that the mayor had given me for July through December. So I looked through there, and of course this is all preliminary. Anytime this time of year, you can look forward to making journal entries, realizing that there's got to be reclassifications and different expenses, different revenue. There's going to be audit adjustments by, of course, the auditor, but pretty much any account that you look at would be a good indication. Let's just take account on general fund. I'm just picking one. Computer equipment, well, let's just go to repair and expense. I say you can look at any account. You can't look at just every account because a lot of, like if you go to water and sewer or gas and natural gas, any, I'm just kind of jumping around on my thoughts right now. Let's just back up and go to water and sewer account, which is page 13 of 20. If you look in the upper right corner, 13 of 20. And you look at account number right there in the middle, 52310-245. So it's telephone and other communication. The first column represents the budget that you guys approved back in June, 10,000. The next column to the right is actual, 5562. So that's just a hair over 50% of the budget has been spent. So most of the accounts, you drop down to regular employee salaries, which is 52310-111. Does everybody see that number? So the budget is 788,300. The actual is about 50%. In fact, you look at the percent of budget is 50.39. The one right above it, employee retirement plan, that's 51.41%. So you can look down vehicles. That one, column 13 or column 3 is 115%. It means you've spent basically all of that budget, but there's going to be adjustments, like we'll move that from expense to fixed assets on the balance sheet because of the type of fund it is. Engineering expenses, you've got 43% of that spent. That's just basically how to read the budget. If you go back to the front page, I just want to hit a few highlights and then I'll ask it if you have any questions. Property taxes, you can see that you've got 28% of the budget in column 3.
Is that pretty typical?
It's pretty typical, yes.
Yeah.
Like me, I want to pay it either at the last minute of in December or I'll wait until February.
Well, those of us and those who have loans on their property, on their homes, they pay them typically in December.
Yep,
so
exactly.
There should be a lot of those paid, but I thought that
December is a big month. I don't have the current month, but January, February is always a huge month. So that's definitely within expectations. If you look down at just another picking account, building permits, well, that's a funny one because you got 25,000 and yet you've already collected 83,000. So you're 334% from what you budgeted. So that's one of the home runs right there. Your grant funds at 33,310, just a little bit down. That one's budgeted at 500,000. you've got 28,000. But like I said, you're gonna have a lot of journal entries over the next, before month end, or before June 30. Now this one, you got about 100,000 coming from the next page, account number 33590. That's the catch-all for a lot of Tennessee money. So what would be classified, so you got 115,000 there. Most of that will move up to the grants revenue on 33310. And then you'll be getting quite a bit more grant money. We don't know how much. There's going to be a lot of airport money coming in. There's going to be, you guys just get a lot of grants.
Have we got reimbursed for the courthouse yet?
You've got 509. Now that one's on line 33515, the account number. So that one we budgeted 600,000. You had gotten more than 600,000 the last 2 years, so I went with we suggested 600,000. So far you've only got 509. I don't know if that's going to be all of it, or if you're going to get another 100,000.
Arno, are you talking about reimbursement from the state about the courthouse project? So no, we have invoiced for some of that,
Okay.
that we are due. That was that other that I was talking to you about in the downtown money
Okay.
that we're missing, but we're hoping that it's going to be here any day because we sent a lump packet of invoices in together that we should be getting hopefully very soon.
Okay, well, what is the 509,000?
That's what has been received so far. Year-to-date actual is a column number 2, and that's what you've received so far as of December 31st. So you're comparing the actual year-to-date against the budget for the whole year.
I don't understand.
On that courthouse line, that's where we get our downtown, what we call our downtown revitalization money that you may not know how we're, that's what we got from the state.
So far.
The rest, that's over
Right.
at Pammy's Hair Salon.
That's all right. I can't.
You'll see down on line or account 33535, you budgeted 120,000. You've collected 56% of it, so that's going to be most likely a over budget. Some other key items would be airport fuel. That's already over 50% collected. Sale of assets, we've budgeted 70,000. We sold it for 90,100 so far. That probably will be the only sale. If you look at the next page, number 3 of 20, that's where you're going to see your different services, like consultant service on 41,256. You're over budget on that one a little bit. Some of that may be reclassified, or it may be misclassified right there, or you may indeed be over 15,000 budget.
Several of those over budget.
Well, there's several that's going to be under budget also, thankfully. That's how it works normally. There will be some items like on, the mayor was talking about downtown revitalization. That's on page 4 of 20, 41,000-944. You have 450,000 budgeted. You've already spent 1.29 million. So we will have to amend that account to recognize the entire cost once it's done, or once June 30 comes. But on the flip side, your revenue is also going to be adjusted to increase how much grants are coming in. So it's not going to blanket out, it's not going to reduce it down to the 450,000. We'll amend the budget to pick up the additional expense and then adjust for the amendment or the new revenue. The regular salaries on 42,100, 111. You're over budget by 50 or 58%. There's going to be some reductions there with SRO money coming in of 300 and some thousand. We'll hit part of that. Nothing in the gas account is going to make any sense because most of your gas sales are yet to come. So none of the accounts are going to make any sense except probably payroll to date. So overall, it seems you're about where you would expect to be. You can find over budget, you can find under budget. We're just in the middle of the year. A lot of the accounts make sense. They're about 50%, 45%, 60%. Nothing really huge jumps out at me. What kind of questions do you think you might have?
Are we pretty good on all our fund balances?
We don't know what the fund balance is because the audit will tell us that number, and that's not yet over. All of the fund balances are strong, though.
We have money, that's what I'm getting.
Yeah. The beginning of the year, we've made a lot of adjustments. The auditors have a good, sound general ledger to look at this year. A lot of work was done before they got it. All the banks are reconciled. All the due-to-froms are in balance, except for a couple, which we know what that is. So they should have a good time doing this audit.
How do you think we're gonna make up the deficit? You've already spent 71% of what we should have.
What number are you looking at?
On page 9 of 20. Total expenditures. We budgeted $6,000,003, we spent more $4,000,005.
It's preliminary, and some of those, Phyllis and I worked with some adjustments. We had to make some changes because the budget estimate on column 1, I found some errors in the posting of it. So we went into the budget software, made the changes, looked at it again, it had not changed. So she's got to get with the software company. She and I did not want to hit post budget again with the changes, thinking it might double up. We can just simply wait for a call there. Don't forget that there's a lot of equipment purchases, like in gas account, water account, is going to come out of expenses, relieving that budget because it's going to be moved over to the balance sheet. And then those pieces of equipment are just going to be written off over time with depreciation.
Well, I don't understand. Why are you showing us,
Right.
why are you showing us that we spent 71%, which is about 20% more than we should, but you're saying because of the software, some of the things have to be moved?
Well, we could not update this for some of those items, and those were not real big numbers. There was a couple.
Why are you giving us something that's not real good numbers? How are we gonna know where the budget stands?
Well, these are really good numbers, except there's a few changes that have to be made. So I'm trying to give you an overall that we're in pretty good shape, but there's going to be some adjustments.
But now there's a lot of income coming in the next couple months.
Exactly right.
Property taxes too.
Gas sales.
That's $804,000 in the next.
I'm talking about expenditures, not income.
Well, but they've already spent it, but we're getting it, is the way I see it, is that?
Right.
That doesn't work that way.
Well, it doesn't always mean you're going to get, sometimes you have to spend money on the front end, like some equipment you've already purchased. It doesn't mean you're going to buy that much equipment in the second half of the year.
But excuse me, again, that has nothing to do with what we're saying here. This is money that we have spent, right?
Right.
Out of the $6,000,000. budgeted. Any revenue coming in doesn't offset what we spent. It may give us less of a loss in the end.
Right, but some of those expenditures are one-time expenditures that you won't have in the last 6 months. Like you may have bought some sizable piece of equipment in the first 6 months that you're not going to have in the last 6 months.
Arno, also, when we get, I mean, we have invoices out also for the state to reimburse us. I mean, that one line was 1.2
Exactly.
million, and we're owed a lot of that back. So that's going to take away, so that percentage is going to change whenever we get reimbursed, and that line is no longer, you know, that. So there's quite a bit that's owed back in grant money that will negate that expense.
I hate
So,
to delay the meeting, but every time we come in here, the figures aren't exactly right. We gotta do something with them and adjust it. When are we gonna have a meeting with y'all, you being CPA? When are we gonna have a meeting that you can give us some figures and say, this is right, this is where we're at?
That may never happen at any city anywhere in the nation because there's always some timing differences, and like regular bookkeeping does not equate to an audit. So I'm going to say it's much better than it has been because we've got a lot of these software entries corrected. Even now, the water fund is still not correcting, it's not posting a lot of transactions for the credit cards. That was a big entry. That was an $800,000 entry last year and this year because the water and the utility bank accounts are not cooperating together. We know how to fix it now, but it's not yet fixed.
You know what I don't understand? My controller, every month, closed out the books and we knew exactly where we stood. Every month. Bruce, I imagine you're the same way at the bank. You don't get to come up and say, oh, well,
But the accounting of this RO is, it's worked every year. And on paper, it may not look that great right now, but it's just paper entries, basically. And you've got to look at what's coming in the future. And we know what's coming in the future, and there's no problem. It shouldn't be a problem.
Something else that we don't account for every month here is accounts receivables and payables. So there's always a timing difference to some extent until the auditors determine, like when I was the auditor, that's not a thing until the very 2 months after the end of the year when you get all the payables and receivables straightened out. So there's always going to be some timing differences, some anomalies. I'm not here every time things get posted. We find a number of posting errors just in reconciling bank statements. So.
well, I'm going to shut up, but I do not agree that we cannot know on a monthly basis where the city really stands. And expenditures doesn't have anything to do with revenues. It has to do with your total income or loss. But that figure is not going to go down just because we get property taxes. But that's enough. I'm sorry to pick on you, but I'm not really picking on you. I do not understand what we're doing on accounting for all of the information, both expenditures and revenues. Enough said. Bye-bye.
Okay. Is there anything else?
anybody else have any questions? Thank you, Joel. Okay, the only other thing that we were going to just talk about, for me to explain, for us to vote on at the meeting was, you know, we are, it's time for the enterprise lease to come back around. And so we've been meeting with them and kind of gave them what our wish list was just to try to get some vehicles that are, much needed for, the job that our public works have to do. We've got to be able to get around. Some of them needed to be upgraded to four-wheel drive. Some of them might have had a bed that needed to be changed on it. But when we reviewed it, we also, I'm not a lease expert, but some of the leases, there were 3 vehicles that were not that high in mileage that we could actually purchase for $400 a piece. So we started out with 21 leases. We went ahead and purchased those 3 for $400 a piece, and so we're down to 18. We have identified one that, when it comes time where it makes sense financially, will be a low mileage truck that the parks uses. That will be, I think it's going to be like $4,000 when it makes sense, when it comes up with the lease, that we'll take that one off and try to get down to 17 leased vehicles. We did go ahead, though, and upgrade a few of them that had high miles on it, or that we needed a larger vehicle to pull some of the equipment to make us, keep us to where we were staying in compliance with pulling certain amount of weight behind the vehicles. So because the upgrade, because it was over $100,000, it has to go to the comptroller for approval. So the comptroller, they always look at our lease, and they in a protective way, and we had to give them a couple of quotes for interest rates to go to the comptroller's office, and the enterprise came back with a 5.25% lease or interest rate. And the comptroller did approve this. Okay, so they kind of studied all of our finances. They studied the amortization schedule and everything that Enterprise had sent. Phyllis had to send several items to the comptroller for them to study it, and they did go ahead and approve for us to re-enter the lease, and we will vote on that at the meeting. But I wanted to go ahead and just get that in front of you guys for any discussion.
What's the principal amount of the loan, or the lease, or whatever it is? How many vehicles have we got?
Well, we're going to have a total still of 18 vehicles in the lease fleet, and there were 7 of them that we changed out. Some of them remained, and they're still on the lease. There's a schedule, and it shows when some of them will, go down to a very minimal fee, and those that we purchased for $400, and I don't really understand how that works. But, the comptroller's office they are trying to protect cities in this, and that's another reason that they go and they assess, what we're getting ready to enter into. And so we'll continue to look at, see when some of those fall off. But, some of our vehicles, we put high mileage on our meter readers and such. It makes sense sometimes in here. I know there's mixed opinions about leases. I don't really know at this point, because we can't really go out and buy 18 new vehicles right now and get rid of the whole fleet. So anyway, right now I think this is our best bet, and I'm going to just kind of continue to look at it, and if y'all have any suggestions, please feel free.
On leasing, we've not been purchasing.
We have some purchase. I mean, the public safety, none of those are leased. The only lease are, there's a couple in public safety, but it's not.
What we're doing, we're releasing the vehicles that we already have, is that correct?
Correct. Some of them. Some of them.
We're purchasing
Right.
some of them, and then we're releasing.
Correct. And then we upgraded some of
New
them.
fleet in.
That's correct. Well, we did upgrade 7 of them
Right.
because we needed to.
Did they take the 7 back with them?
Some of the ones we moved around inside the fleet. So.
What I'm getting at, did they come and check our vehicles, the condition of them? Was they satisfied the way that we was going, that type of thing?
Well, we haven't done that yet. We had to get comptroller approval first, and I'm going to get y'all's, get a vote on this at the meeting before that actually takes place.
But you've got a
So.
dollar figure, what did
Correct.
on 17 vehicles, 18 vehicles.
Yes, yeah.
We're just looking at the residual value on trucks is much higher in these past 3 years than what they thought it would be when they leased it. So
Right,
that's a good thing.
yeah. It is.
Well, she
So-
was just worried about the 18, 400 apiece.
That'd be really.
Yeah, it would.
If you didn't take them, I would.
Okay, if there's no questions about that right now, we'll just revisit that at the meeting to vote on that. And we'll adjourn for about 15 minutes, okay?
How long did we release these
5 years.
5 years?
Yep. So,